Good afternoon, everybody. I have a weekly chart right here on Apple, the best stock in the FANG stocks, including Amazon and Google and all the rest of them. We are at a point where we're hitting major tops and major highs. We've had many upgrades and many things going. This is going to be, again, a stock to buy on pullback. So it's going to be a year 2020 story. We're up here at the highs. We hit the highs of 293.97 cents. The low was 280, so that was a nice pop. One of the things that I would say is that everybody needs to keep a stop market. So if you own the shares, you got to have a stop to protect the money, depending on where you bought those shares. If you bought them a couple of days ago, when the stock was the low 2 days ago, that low was on 1223, that low was 280.37. So for a friend of mine, if you bought it over in there, you should have a stop loss about $5 below where you bought it in case we get a bigger pullback. This is a weekly chart, which is very bullish. This is about as bullish as you can get. The only thing about it is, is that we've had multi-weekly breakouts. We had a couple of nice little dips, and then we had a lot more upgrades that came out. And everybody is in Apple. And the old saying is the greatest company, and the revenue stream is even going to get better with 5G and some of the other rollouts that can happen over there in China with the phones that they're marketing to and whatnot, and that the service side of their business model continues to grow on all cylinders. So all of their other gadgets are really performing well. And that would take the earnings cycle much higher than what we are currently at, even though the estimates by analysts have come up. So, you get everybody on board one way in the short term. We are due for a pullback in January. It's the stock to own, but once again, you want to buy them when they're on sale, and you do. So I'm going to conclude that every dip has been bought, and we've had an ascending weekly, 4 weekly breakout pattern right up to the highs. So once again, for the people that bought options on it and own call options, depending on what strike prices you bought versus owning the shares outright, have stop losses and keep them on there and then buy the dip when they come down in January.